Good morning, everyone. My name is Josip Kosic. Welcome to Option Trading Live. I want to confirm that the sound is good. We are not financial advisors. Please take a moment to read these disclaimers, even if you need to stop it. The place where you can get in contact with me is right here on this email. And today is a big day, November 8th. We're gonna discuss three things. We're gonna go over today's price action. Then I'm gonna show you the expected move for today, for tomorrow, versus let's say when the CPI numbers come up. And after we look at the price action today, we're gonna examine the four major markets, which includes the Dow Jones Industrial Average, Nasdaq, S&P 500, the mother of all products, and Russell 2000. So, with first thing first, we are going to bring in our platform here and go over the current price action. So, as you can see, S&P 500 cash is up for a day. Jeff, good to see you. So what I want to do right now, I'll also show you on a FinViz, how did this price action play out ever since the bell rang this morning. So what really happened is that the very first 10-minute bar on the NASDAQ was down just enough to fill the gap. So obviously, when we open up this morning, we open slightly higher, and we then have traveled all the way down to this dotted line to close the gap. Same was the situation on S&P 500, but what is different with the Dow still has left this little area of the unfilled gap right here. Now, it has ever since then gone straight up to the upside, and now going into the lunchtime it's slowing down. Now you're going to notice there is a one buying opportunity that we're going to explore later on, and that is a Tesla. You want to buy something when there's, as Peter Lynch said, there's a blood on the street, right? When nobody wants it, that's the best possible time to buy Tesla. Of course, we're going to look at the chart and go over all these things, right? So next thing that I want to show you, it's very, very simple concept, is a concept of the expected move. What is the expected move today on an S&P 500 versus, let's say, Thursday when we have CPI numbers that come up? And one of the places where you can see that I'm bringing here Thinkorswim platform is simply to focus on the numbers here day by day. So obviously today is election day, and all that expected move is about 22 points up or down on S&P, which is absurd. Because the reason why I'm saying it's absurd, I want you to notice, did we not already move 29 points? Obviously, the market maker expected move plus down, either up 22 points or down 22 points, was completely wrong, which means they mispriced the option. They made them extremely inexpensive. Having said that, why don't we go back on our platform and just revisit the SPY volatility just to confirm what is going on. So as you can see over here on a SPY chart, that the volatility has been moving in what direction, up or down. It has been decreasing. That's mean if you're considering being a seller of the premium, you should reconsider it. Maybe it's a good time for you to be buyer of the a buyer of the premium. We are above the 9-day exponential moving average. We have closed yesterday. Today is confirmed. One thing that I'm hesitating here on the SPY on a 5-minute to initiate is a long trade right into what? Right into this resistance that we are facing on a 5-minute. Now, if I would change this to the daily, the things would completely change, and it shows that we have a lot more room to travel. Now, I want to go back and compare the next piece of information on expected move. Now, expected move for tomorrow, Wednesday, is slightly higher. And let me just change the color here so I don't use always the same blue color. So this is a 1 day out, meaning for tomorrow. They don't expect the 22, they expect the $51 move either up or down. Now, I still think that's quite low, knowing that by tomorrow the election results are going to be in, and the price of the S&P can rally either up or down 50 points based on whatever the market interprets those results. However, what I want to really emphasize here more than anything else, that there should be something that should be poking your eyes. Later on in the week, which is on the 10th, Wednesday, we have a CPI numbers coming up. And they're expecting that that is going to move the market either 88 points up or down. That's why we have this plus or minus in front of it. So what I'm going to do right now here, I'm going to bring my agenda because I made sure that I have a clear explanation, go over today's price action, show the expected move, and prove that the midterm have no trade. So then what is the real trade? The real trade is on Thursday, the 10th, when at 5:30 in the morning, Pacific Standard Time, or 8:30 Eastern Time, the CPI numbers come up. Now, this consumer price index is uh, giving the information month to month and also giving information year to year. And if those numbers turn out to be good or bad, expect the market to move at least as the market maker expects, minimum 88 points up or 88 points down. Now, you see, this is a kind of normality. As you go further away from the current date, you would notice that these numbers simply go up, 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 and up, so that's just a natural thing. But everybody knows that today is election, and everybody would expect today or tomorrow to be some kind of huge move, but the market maker is very realistic and it doesn't expect anything till once again the CPI numbers come in. So having said that, I'm going to just tuck this away and do something that should kind of help every one of you to gauge the bigger picture of what is going on with the market. So if I pull up here four of the major markets on a daily and just compare today's price action to the yesterday's price action, starting with the Dow Jones, I want to make sure that it's clear that we are definitely outside of the yesterday's range on the Dow Jones Industrial Average. So as you can see right here, being marked with this yellow line is high of the yesterday, and we are above it. And if this is supposed to be resistance right here of the last week, we are also above it. So having said that, Dow Jones is on a tier to the upside as of this morning, which we cannot necessarily say for what? For the Nasdaq, because the Nasdaq is higher for the day in comparison where the price action closed yesterday. Yet what is really interesting that we are far away from a previous week high. So obviously, if anybody is going to go long on something, be aware of it that as of now, the Nasdaq is still in a downtrend, and it's not the best possible candidate to be bought long. However, Tesla is something that I'm interested in. I'm going to come and work on that in a moment. The next thing I'm looking at, it's quite similar to the Dow Jones, but not the same, is the S&P. S&P is up for a day, but has not taken out this high. So that should be possible target for everybody who is considering trading the S&P to the 3900. And let's just move on to the Russell, that is often most forgotten index because not too many people look at it. It's a small caps, includes the 2,000 stocks, but I call that middle class America. It's really showing that for the last 4 days we've been up. So I don't necessarily see trading opportunities on any of these four majors, which is the reason why prior to coming to the session, I was looking at the charts for the, believe it or not, FXI. So, Jeff, if you know what is FXI, feel free to type it in. But before I do that, I'm going to examine the chart of the Tesla, examine the chart of the Apple, and create a trade on whatever the chart and whatever the open interest is telling me for a Tesla and Apple. And then maybe I'm going to be long-term bullish on a FXI. And FXI ticker might shock you once when I bring it up. So let's now go to the chart of the Tesla on a daily here. So on a daily, we're looking that Tesla is down. It has been trading in this box, just like S&P 500 has been trading in this box for a while. And it's interesting that rather than breaking to the upside, the Tesla has broken to the downside. Well, what box was I talking about on the SPY? On the SPY, I was talking about this box. Maybe I should show that on S&P 500 cash. That would probably be better and more obvious if I just show that on S&P 500 on a daily. On a daily, SPX cash settle index has been stuck in a box for a long period of time. And that box is round number of basically 3,600. Let me just get maybe orange here so it's going to be easier for you to see. 3,600 multiple times to about 3,800. So the fact that we are now trading outside of the 3,800, it's very good information because we might revisit this 3,900, right? Well, for a Tesla, that box has not been tested to the upside. It has been tested to the downside. And obviously, if I do the same kind of orange demarcation, you're going to notice over here that we have a box that's been punctuated not to the upside, but to the downside. Now, I will cancel my trade if I'm the only one considering that possibly Tesla might surprise everybody and come and revisit this 200 level. Now, what's the best way to confirm that the 200 level is really being traded? The correct answer would be to pull up the option chain and to look at the activity on an option chain for a Tesla for this week at the level of the 200. So what we're doing right now, we're pulling up the information for a Tesla at the level of the 200, and I'm going to specifically focus on the open interest and also on the volume. Specific level is going to be 200, and that's the line that right now I have highlighted in this yellow area. So if I put a square right around open interest and volume, you would notice that open interest and the volume are in 4 digits. In 4 digits. That's mean $200 calls could be either sold or $200 call in a low implied volatility environment could have been bought as a possible target due to the fact that Tesla has a possibility to rally up back into this box that I was pointing out to you. So just when nobody expects that anything is going to happen with Tesla is going to end up going lower, all of a sudden Tesla has a huge bar and we end up going lower. Now be aware of it, that contradicts the trend, because the trend is where? trend is down. As of now, we are below the 9-day exponential moving average. So what I'm considering right now is very simple, and I'm going to just type it up. I'm considering on the Tesla that is currently trading around the 190 and some change is buying. Okay, so Tesla is right now at the 191. Let me just make sure I'm considering buying to open, BT buy to open, $200 call, which is, by the way, out of the money. But just in case I'm wrong, I want to finance it with out of the money bull put, even if I need to get the multiple bull puts. So having said that, I don't want to talk too much. I want to place the trade. And what I'm going to do right now, I'm going to fire the trade in right here in the paper trading account. So here's a Tesla. Here's a $200 call that has a huge activity. And let me put one more time box around it so everybody can see that this 200 has traded today, just the volume today, 5,918 contracts. There's no way that these 5,918 contracts can be closing this open interest of 9,000 because math doesn't add up, which means there's this activity on the volume that tomorrow is going to be adding up on the top of this 9,000. So if I go ahead and purchase this right here, and this is already moving, it was 254 seconds ago, and now it's already jumping, as a single long call, make sure that this is within your vision, and fire it in, I got filled at 254. Now my eyes need to look at the chart and see where can I find enough money to finance it. But before I look at the chart, where are those green UFOs, I have a kind of shortcut that I can teach you and show you how we can actually do this. And just change this now to red because I'm now looking at the put side. I'm looking here at the open interest. And when I'm looking here at the open interest, there's again area that it's poking my eyes because it's the biggest number. This 58,000 volume today, there's no way that that volume today could subtract these 22. So therefore, we can't be assuming that this volume is closing, this volume is opening. So that would be the good place for me to start looking. Now, there can also be 185 that might be a possibility for me to entertain if the UFOs are right there. So having said that, let's bring up the UFOs. On a Tesla, we would need to go down below here and to see, do we have any UFOs at 185 or at 180? So I'm changing this to 144 to see any activity. This is loading, scrolling it down, moving the chart. I don't see anything. 33, not seeing anything either. Not seeing anything either. Why don't we just now look at one more time the charts from the daily without the UFOs, just to kind of get a better grip on where is the possible level of the support for the Tesla. So if I'm looking right here, it can be all the way down here to 175. So maybe I need to entertain the possibility of the 175 as my possible sell point, because I would feel more comfortable at 175 than at those random numbers that were shown to me. So I'm going to check one more time. 175. What does this 175 has? Well, still it has a pretty decent activity. Now, only problem that I have, it's giving me only 85 cents, and I have paid $2.50 for it. So maybe I can finance the November with the regular monthly November, if the 175 even exists, but it doesn't exist. Oh wait, maybe I can ask for more strike prices here. Just ask for more strike prices and see if they are giving me 175, because that's the level that I was looking at. And it has a 180 has a better activity, but that would be then below. So this would be giving me 260, and I like that. I like that. So this 260 would definitely pay for it, but then I would need to also offset that with something lower than that, and I will most likely then pick the 175, 170. So let me just go ahead, sell a vertical with the $5 spread. That's 83 cents. So I would need to then make this into 4 contracts to get that $2, and that would then be giving me maximum profit 236. Maybe I can go down and put a 3 to make sure that I get that 252. Yeah, that's good. So this is close enough for me to pay for that thing. So I'm sending 3 of them in, and it's working, waiting to be filled. Drop the by penny here because this is a paper trading account, so we really don't want to be with the paper trading account playing. Okay, so this is what we did. Okay, so let me now get the specifics of this particular trade, right? So I'm opening up here option chain, and I'm creating the spread. This particular spread that I'm going to create is going to have a November 11th $200 call that got filled. And I'll just show you this one more time so you know exactly what it got filled, so there's no confusion here. I'm going to just take a snapshot of it. It got filled for $2.54. So if you know that this got filled for $2.54, what we're going to do next, we are going to make sure that we have that information specified right here. So this one is done at $2.54 debit, and then we had this bull put that was selling so it was selling to open 175 put at $2.60, and it was buying to open BTO. I should type in BTO. Let me just scroll this so you can see it better, because probably things blocking it. 170 put. Maybe the sign is better than typing in the word at, for $1.77, and that gave me credit of the 83 cents, right? So now that I know this, what I'm going to do here, I'm going to just enter that price of the long call that we did for $2.54, 254. Okay, so now that we have that, I'm going to go here where it says edit spread. I'm going to add an option leg, and I'm going to add another option leg, and one is being sold, but it's not being sold on a weekly, it's being sold on a regular monthly option. And that was not a 200 that we did over here for $2.54. That was a 175 was filled for $2.60 credit. You see, if this is filled for 260, then like, why did I need the other leg? Well, I needed the other leg because then I'm what is called cash secured put. I don't want to use the word naked, but it would be cash secured put, and that would eat up too much of the capital. So let me just explain how much of the capital that would eat up. If I have a 175 strike price and each option controls 100 shares, then you would need to multiply this by 100. So that would tie up $17,500. Now you would notice in my option account, I'm trading in a paper trading account, my net liquid value is only what? 10,000. So obviously I couldn't do that, and that's the reason why we did this lower leg at the 170. So this lower leg at the 170 returned back some of this money that we have received. So 260 is what we received, and over here we had to give them back 177. Now notice what I did here. I actually ended up selling three of them. And the reason why I sold three of them is to finance my whole enchilada. So now that I have all these numbers, I'm actually totaled down about the 5 cents plus the commission. So let me just recap this, so it's kind of clear what this is before I go ahead to the risk graph, because I know that the risk graph is something that everybody looks at and is able to understand better. So single right click on this creation that we did, pull it up, and here's the risk graph. So this is as much as I'm going to stay on the topic um, of the Tesla, right? So my goal is to see Tesla go up to 200, and if this option doubles, if this 250 becomes, let's say, $5, right? I want to take money and run, leaving these downstairs at the 175 and 70 to expire completely worthless. So having said that, how do we do this? Well, one of the easiest way to do this is that you single right click to duplicate the order, but then you don't duplicate the order, you clean it to the opposite side, change the time in force till good till cancel, and simply type in $5. So whenever this 250 or whatever that change was becomes at $5, I want to close this. Okay, so be aware of it, that I'm only placing a target on the commanding unit, or the unit that is going to be earning me money. And this is 200. And it's very, very possible that this can get hit, because ever since I start looking at the chart, we were at 191 and we're now at 192. Could it be that the market is lifting even higher? Well, here it is, including NASDAQ. It's going higher. I can update this and you would see this market is just not stopping. It's going up. And the Tesla that was down 4% is now down less. So I know I have other two trades that I want to discuss. So I'm going to just hurry up. So other trade that I want to discuss is already up quite a bit, so we might be kind of a little bit late on it. It's Apple. What I like on the Finviz, they have connected the three dots to show us that the trend is up. However, that does not substitute our own analysis. So if I follow the very same steps that I did on a Tesla, I want to go through these steps again with you so you can see the logic that I'm doing. Is there a number under the volume that is simply poking your eyes that is unlike any of the numbers that you have seen? Let me just now change this to blue because I'm working now on a call side. There is a number right here on the volume that is 5 digits, which is only one on the volume. Now, of course, we have a 5 digits on open interest here, and we have a 5 digits on open interest here, but I'm talking about the combination of the volume and open interest. Now, of course, in this case, somebody can make argument, what about if these 12,000 contracts are closing these 15,000? Yeah, that's very, very, very possible. That's very possible. So do not place trade based on looking only of the volume and open interest. You have to also look at what? Let me just take a snapshot of this. So when we come back, there's a less confusion of what we did and why we didn't pick what we didn't pick. So I want to put this inside the Word document, because on the Word document, I also said I'm going to work on an Apple. And this is a trade that I'm working right now. It's on the Apple. So on an Apple, I'm going to place this in because this is very important for me to know that at the time, Apple was trading at the 140 when we are considering this trade. Tesla, when we were jumping in, was trading at 191. Never mind that since then, the Tesla has rallied, or almost like whatever that was, 1.5 point. 1.5 point. We need to look at the chart and we need to see what this whole thing is going to do for us when we discern. And I think that's correct word, because the trading is nothing else but the decision making process. So we're really discerning whether or not we should place the trade on the apple. So we need to pay attention to the UFOs. We need to properly read on a daily what the price action is doing. So when I'm looking here on the daily, interesting, 145. And what do we say that we have seen as a huge activity? 145. Could that be a coincidence? No. The same thing that you're looking, everybody else sees it too. So this is a good target. Now, I'm going to move down here and I want to point out to you, green UFOs at which level? In between the 133 to 129. What does that mean? Well, that means that we need to look at down here in the same way we have looked at earlier. Where is a big activity? Hint, hint, hint. Under the volume. Don't mix the open interest. Open interest is the activity that has been in existence since yesterday. Volume is activity from this morning up to now. Wow. So they're placing it at 135 just before that zone that we have seen. So what I'm trying to do right now is finance this 73 cents right here. I know I should be changing this again in the blue so you would not get confused, because I would be buying this 145. It wouldn't be nice if I can get this with this, yeah, but then I would need to put $13,500 for this particular strike price. So could it be that I turn it into a kind of $5 spread? Yeah, well, in that case, I would need to add the strike price down here. So could I do this all on the same ticket? Well, I could, but why don't we do it like this? I know that this is going to cost me 73 cents. So if I know that this is okay, I better fire it in. Now it's no longer 73 cents because market is going up. It's 75 cents. So I'm just buying the single one, and I got filled here at 75 cents, as you can see. So what I'm going to do here, I'm going to, this thing is bleeding fast. So I'm going sell vertical, but make it into $5 spread. And now I'm getting the 51. Well, I can't get the 1.5 of these, so I would need to take 2 of these to finance. So now be aware of it. Rather than putting $13,500, how did you get that? This 135, one more time if I bring it up. So if I have a, let me show the calculator. Remember, before we were doing the 175 strike price, now we're doing the 135 strike price, because that's the sale. That's obligation to buy at that level. We need to multiply by 100 because each contract control. Rather than putting 13,000 online, I have put in only $1,000 online. That is, in Apple, I have invested $1,000. Costco, we had a trade from before. It's nicely making me profit. So if you want to open up that trade and see what we did there, it will make perfect sense to you, because that's the trade from the last time when I taught options. We have placed the put that is now virtually expiring, and we don't need to do anything because this thing is going to just completely die out and keep the difference of these two. While the target is not present because the target already got hit. So let's now expedite this. I'm going to go over here. I'm going to type in AAPL, Apple. So we have 2 trades. We want to exit this one when it doubles. So I'm creating not a duplicate order, but the opposite order. I'm changing this go till cancel, and when 73 cents becomes $1.40.6, right? That's exactly double. Let's make it 150, just to be exact. 75 times 2, 150. Whenever that happens, I want to get out. So what is going to happen? I would then double. Well, it's 73. I thought I got filled at 75. That's even price improvement. That's done. Okay, so we have done first two things, and now we're gonna go maybe on a FX side. So here's a disclosure, and Jeff, I wanna tell you that FXI is foreign country. It's ETF that tracks China. Now, when you see this, you probably feel intimidated due to the fact that they trade when we sleep. So these are not the real gaps. This only accounts for the price action of 6.5 hours when the US market is trading while they are sleeping. So obviously you heard that they're opening up. They no longer have COVID restrictions, zero COVID restrictions. And as you can see here, we had a huge gap up. None of this substitutes looking at the chart. So let's look at the chart together and select where the target should be. There are multiple targets, but if they are here around the 27, shouldn't they also show up on the print? So let's take a look, opening up the chain for the FXI, taking up the nearest possible, we can see, and looking at the volume and the open interest. Well, I'm actually seeing a huge activity right here. Huge activity right here on the 26, which is even before that level. So let me make this a little bit more obvious here on the 26. And because I'm working on a call side, I'm going to again change this coloring into blue. And I want to point out to you, open interest is crazy number, 6 digits. Now, of course, today activity, the greatest today activity is right here on the volume. So I do want to purchase this for 54 cents. So if I purchase this for 54 cents, I want to also finance it. So what would be the fastest way to finance it? Well, with the puts. So I'm teaching the same strategy that I did on a Tesla and on Apple, now also on China. So having said that, what I'm going to do now, I'm going to just bring in the FXI here. FXI, going to the 26, confirming that those numbers are great. But wait, we didn't pick the today's expiry, we picked actually November's expiry, 26, and we have seen the activity on 26 that was matching over here. Activity on the 26 was matching. Let me just float this for a second. What the chart was telling us, that we like to get out before it start hitting these levels. So if you know that we want to get out before it's hitting these levels, we're going to go ahead and pony up the amount of 54 cents to buy this 26. Wait, should we go December? Maybe it's more. Yeah, December is a way better choice. Now, when I say December is a way better choice, I just want to open up this option chain and let the chain speak to you, not me. Let the chain speak to you. And again, I'm going to use this to kind of give you a hint. So volume is just an activity today. Open interest gets adjusted only once a day at the close of the day. That's when they add and subtract and they say, oh, these are still open. And this is a number that is a 6 digits. That's mean long-term investment, 26. With the borders open and zero COVID policy going into Christmas, there's a possibility of the Christmas rally on the iShare Trust China ETF, large caps. That would be equivalent of their S&P 500, right? Large caps. So what's the most that you can lose? 56. Now it will be difficult to finance it because look how these things are. Well, how about if we then pick this one right here? Isn't this the one that has enough activity? And we would need about a couple of these or maybe three of these to finance it. So let's take a snapshot of this quickly so we have a memory of what we are doing here. And I'm going to put it in the Word document here. Long-term bull means that we are picking December. So we are trading December out of the money 26. And FXI is currently around 23, and whatever the number is, 23, 24. So we obviously see that the December out of the money 26 call trades at, I don't know what I'm going to get filled, let's say 54. Okay. And then we do the bull put, but we should do at least two bull puts. So two, and then bull puts to finance the call. To finance the call. Okay, so that's what we're gonna do. So let's now fire these trades in. So I'm looking at the 26. You see, I should have placed the trade in rather than talking. Because every time when I take time to talk and to type, this thing already moved. This is almost like a 24. It's a shy 3 cents from a 24. So there it is. So I got filled for 57, and we are at 23.97. So we are 23.97 to be exact. And because I was taking too much time to talk, so we can always get rid of this. So be aware of it. This is not a trade that I expect that is going to be done this month. This is a trade that I expect it's going to be done later on. So now $57 have gone out of my account. If you look at over here, cash and sweep, you would see where we started, what happened when we placed the Tesla, what happened when we placed the other one. So it's being deducted, plus the commission is 65 cents. And this is the way how it works, okay? So having said that, I have paid $55 for one of these. So when I have my open position here, because I know it shows that I have way too many open positions, there it is. So Apple open position has the buying power effect because we have a what? We have a two $5 spreads. Each $5 spreads is a $500. 2 times 500 is 1,000. Okay. Costco is a different beast. It wasn't done in this session. I'm not going to discuss it. And then we have a Tesla over here that ties up because of the three $500 contracts, 1,500. Now notice over here we don't have any buying power effect because we paid $55 for it. So here it is. I can just type in FXI. It's China. I got filled for 55, and now option is worth 56. All right, let's take that dollar. Do you want to take that dollar? Because your commission is a 65 cents. So even if you exit, you will need to pay another 65 cents, which is $1.30. So you wouldn't be up. So be aware of it. We need to finance this. So how do we finance it? Well, I said that over here, this is really looking good at 20. Do not place that trade till you look at the chart. Do you feel comfortable with the 20? Oh, look at this. Coincidentally, that's out of my vision. That's right. It's out of your vision. So that means it's below the lowest possible before they unlock the COVID lockdown. So a lot of traders deem this what they call secure area. Secure meaning that it's safe, that it came number of times there, and the sellers were no longer in the control because the buyers overwhelmed them and pushed them to the upside. So having said that, I better fire that trading. Now, if I'm doing this for 22 cents, look at them skewing this. Oh, we want to charge you 48 cents. Should I pick that particular spread? Or should I pick this one that is at 6? Now, be aware of it. Nobody has ever traded it. NA means nobody has traded it. Here's a one person trading it. Here's an 8-person trading it. Well, I shouldn't say person because one person or one institution can trade 8 contracts. Here's the 8 contracts traded, which makes this spread tighter. It makes it tighter. So as you can see over here, we have a tighter spread. So I'm going to be doing the $2 spread. I'm going to be doing the 20 and 18. 20 and 18. So now that I'm doing 20 and 18, it's 14 cents. I'm going to jack this up to 3 contracts. Oh, I'm sorry. 4 contracts to have enough to cover my whatever that cost was. So over here is the 56. So I'm now send it in. 1 Mississippi, 2 Mississippi. Let's sip some water. Jeff, you're right. It's China. We can look at the emerging market. We can look at some other one, but I noticed that this is outside of the Bollinger Band. It's really looking good, especially now that they have opened up the thing and they're growing in terms of the strength economically, militarily, and geopolitically, any way you want. So it's a longer term trade. It's not like a get rich quick kind of trade. Okay, they're not giving it to me. 55 cents. I'm working order here because it's paper trading account. I will just go ahead and drop it to 13 cents. Now, I know 13 cents is not going to give me exactly what I want. It's giving me 52, but it's a paper trading account as long as you get the concept. So there it is. So I got filled for a 13 cents. If I now change this open interest into the position, over here, position, you would see. So I have 4 contracts here. So when you multiply, that would be $800. Hence, there's $800 of the buying power effect. No, you can add another one. Yeah, okay, I add another one, but what's that going to do? That's going to increase to another 200. Well, but then you're going to be completely paid out. Well, these are those decisions that you need to make yourself. If you really feel that makes that much difference, that you really want to be completely free trade, go ahead, change it. So now 13, increasing the loss, fire it in. Now you have a 5. That's an easy multiple, 2 times 5. So your 800 has become now what? 1,000. So out of your $1,000 account, ladies and gentlemen, in less than an hour with Josip, there's only $5,000 left, whether you're going to use that for options. And this is a good place for you to stop. You do not want to blow all of your money in 1 hour of trading, because what about if the market reverses? Seriously, hey, wait, but you didn't put the stop. Well, there's no stop on those. There's only target. Why is there no stop on those? Because they are out of the money beasts. They're the out of money beasts. So be aware of it. This is my driving unit. This is my commanding unit. This is my main unit. And that's the word that I want to close. So 55, where do I want to get out? $1.10. That's a double. So when it doubles, make sure that you do not forget to change the time in force from a day order till good to cancel. So there it is. So now when I'm wrapping this thing up, be aware of it. Cash available versus. So we started this account whenever I reset it with about $10,000. We made about 511. We now have these positions open, everything except the Costco, because Costco wasn't presented in this position. In this particular session, was presented in my previous session, so you can go and find the link and view it and see how we worked out that trade. The target was already hit on a Costco, but what do we still have in existence? The two bull put spreads that are going to just die naturally within next week, because this is the second week of November, and Costco has the expiration on the regular November option that expires next week. So let's now enter that information here and be done with it. So FXI, we went ahead and we purchased that particular. Let me just grab this at the side so I don't need to over talk, and I can just fill in the numbers here and start wrapping it up. So December, we picked the December, and specifically we picked the 26, and the reason why we picked the 26 is because that was right below that resistance. So that was it. And then we went ahead and we actually financed it with two option legs. So they were for the same cycle, but we did them 5 times. So it was a 5 of the sold and 5 of the bought. We picked the 20 as a unit that is being sold, and we picked the 18 as a unit that is protecting us just in case something goes down. And over here the fill price was, and I'm just reading off here whatever I typed in, 23, and over here was 10. So just want to make sure that you know from where I'm getting these numbers. So just drag this back in here. So I have gotten those numbers right from here, 23 and a 10. So that's where I got it. So when I enlarge this right here and take a snapshot, we're actually ahead by $10. What do I mean by that, ahead by $10? Well, that $10 that we are ahead is enough to pay for the commissions, because we have a multiple commissions here. We have a commissions on bought unit, and we have a commissions on a sold unit, right? So this $10 is going to pay off these 65 cents that you need to get multiplied 10 times plus one more 11 times. So we have enough. So this is now completely free trade. You want to look at the risk graph? Sure. You look at the risk graph, and then I need to start wrapping up this whole session and reviewing what we have done thus far. So here it is. So it says, oh, the most you can make $10. Well, yeah, if you have them as a combo, but I don't want to have them as a combo because I know the target is, and let me point out to you where the target is here. I'll make sure that you see it. Target is right here into this red UFO. So basically, it was right here that we bought 26 call, and we have financed it with the sell of the 20. So let's recap everything that has been done ever since we commenced this session about an hour ago. We looked at today's price action. Let's just revisit it one more time here, just to make sure that we didn't miss any major activity. Well, it's a lunchtime, so it's perfect for us to meet here during the lunchtime, because this is where the market pauses. So Dow has ripped 487 points to the upside. S&P has probably touched this 3860 target, and now it's taking a breather. Tesla was a blood red, and it's no longer blood red. And what do I mean by that? Because when you click over here, blood red would be down 3%. I think Tesla was down like 4% or something like that when we started the session. In fact, what I can do here, just to kind of make the things more obvious, I can just revisit the Tesla here before we dismiss and show you that the low on the Tesla, low was probably when we started the session, was at 186, and we are now at the 194. That's an $8 move. Now be aware of it. Our target for a Tesla is 200. So if this is a 194 and it's dancing right now, you don't think the Tesla can move $6? So Jeff, do you think the Tesla can move $6? I mean, not today, but I mean like between now and end of the week. Think that's possible? I think it's very, very realistic. Very, very realistic. So after we review that, uh, we show you expected move, and that expected move actually proved that they don't expect much of anything because the real mover is going to be the Thursday CPI. Thursday CPI, you can pull it up yourself. You just type in forexfactory.com, go to today, and then push it 2 days out. So we have one of the Fed heads speaking, and then we have here. Now, why would anybody care about the CPI number? Well, you click the details, and then you read this. Why would traders care? Because it shows this ugly word, inflation. That's gonna be a mover. Isn't that something? Not the election, but this number, fact is gonna be a mover. And then we concluded there's really no trade but this CPI trade. Then we worked on the Apple trade. After we finished the Apple trade, we walked on Tesla trade, and then we finished at the FXI. So all of you present, I want to thank you for attending this session. I know you have other things that you can do, especially now that we're going into Christmas with everything else going on. But I hope this was valuable for you. What I really wanted to do is to pick the one strategy, and that was buying the out of the money call, and teach you how to do buying the out of the money call only if it matches whatever the chart is telling us. And we have this UFOs right here telling us that this is a major resistance here, and we said we're gonna get out before that. But then that wasn't enough. I actually went ahead and pulled up the option chain and said, is my thinking based on the UFOs lone thinking, or are there other people who are thinking the same way like I do? And then when we start pulling up these option chains, looking at the volume was just extraordinary in any of these numbers. Every one of those things that have taken the snapshot was just simply poking our eyes. I mean, like here you have a 5 digits, while everything else is like a what, 4 digits or 3 digits. So you're like, well, there's definitely going on right here at the 145 for the Apple. And we have actually seen that when we type in here on the Apple that the 145 was a red UFO. So there's two ways you can approach it. I prefer to approach it first with the chart to see this. And it's like, okay, so now when I pull up the option chain, and option chain can be really overwhelming because, when you pull it up, there are a lot of numbers here that are probably confusing, So you just need to focus on the one. And as I said to you, I like to kind of use blue if I'm working with calls, and use the red if I'm working with the puts, and then just kind of zoom in, which of these numbers are really poking my eyes. And it needs to be some numbers that are really popping up, that all of a sudden you see, oh, there's more numbers here than, let's say, over here. You see over here you only have a 20, and then when you have some huge number like this, 4,260, you're like, something is going on here. So we have done that, and we have then moved to the unknown product because it's not really our market, it's a foreign market. Of course, you can look at the different tickers, and I mean, I can just throw in the FinViz here for you, just a few more tickers. Let me just pull up the FinViz here and finish it up with that. On the FinViz. Okay, where is my FinViz now? I don't know why I'm not able to bring it in here. You know what? Let's leave that for the next session. On the FinViz, I'm going to give you more of information next time. We're on top of the hour. Thank you once again. Enjoy your day and always stay hedged. Goodbye.